like to know how you identify leaders. I know relative strength is probably important as well.
Yeah, I think what's important in a bear market is you need to keep following your weekly and daily routines.
Mm-hmm.
And that includes, screening for stocks, watching what sectors of the market are leading. To me, it starts with sectors. We know that growth,
Mm-hmm.
at least for 2/3 of 2022, was horrible. It got decimated. But you're always looking at the market for change. When do we start seeing change? And when we got to October, we started to see change. There were stocks that were breaking out. Nvidia broke out. The housing stocks broke out. There were a bunch of others that started to move, and the XLK actually started to really turn up. So you said, well, maybe this has a little bit of a change. Growth might be able to perform. And if you're following your growth screens, and relative strength is so important. And SMCI is one of them that, even with the market trying to keep everything down, SMCI was kind of grinding its way higher and making these bases on bases. You say, geez, this thing is slowly going higher, even amongst the weight of a very negative bear market. And those are important to watch, because when the weight of the market gets lifted, they're usually the first to pop out. And Nvidia's big earning report, where they forecast a dramatic increase in sales, helped the entire semiconductor AI theme, and SMCI is benefiting from that. And the other one that really was early to move was Rambus. It actually started to move while we were still in the bear market, and it was grinding its way higher.
I traded that one. Yeah.
So Rambus was there, and finding those stocks that have, if you can find triple-digit earnings and sales, even amongst a bear market, you're saying that's rare. I mean, there are companies right now like, Celsius, which is more of a retail beverage stock, is just got Pepsi on board to help them with distribution of product. They've made a major investment, and they went through a couple of quarters where they had to unwind previous distribution deals, and they took some charges on their fundamentals. But that's behind them now. And so I think we're going to start seeing some really great earnings and sales from Celsius. That's one. I know ONON, which is the sneaker company, also has really good, strong earnings in sales amidst this bear market. Now, it got hit really nasty at earnings 3 months ago, but it's recovered to build a base, and it's right near the lip of the base right now. I do own a position in both of those stocks, Celsius and ONON, but I think they have potential. And it's interesting, those are not tech stocks. So in addition to playing AI with NVIDIA and ACLS and Rambus and SMCI, there are other merchandise that is starting to emerge and get some traction. And so, you want to be doing your screens, because you have to be ready. And I know that bear markets can they wear you out or scare you out. And I know some people kind of got discouraged taking a lot of paper cuts, that they didn't do anything when we started rallying because they were just scared. And now they're kind of saying, geez, is it too late? What should I do? My advice is don't panic. I mean, there's plenty of time to build your exposure in the markets. We're only a few months into this. I think what you have to do is, stalk the leading stocks. They're going to get some opportunities to either add to those positions, or if you didn't have that stock, there'll be a chance to get in, but you just got to manage your risk very carefully. You don't want to be buying, an extended stock, because that's not going to work out well.
Agree. Excellent points there. No chasing, no fear of missing out. These are common themes. And of course, that's what always happens, is human emotion takes over, and you want to jump in. You're like, I'm missing out. But the market will always provide entries. And if it doesn't, there are more opportunities out there. There's always more opportunities. And that's the beauty of the market. And so it's always about risk reward. And as it gets up there and it keeps running, the reward is less than the risk, and the risk keeps increasing. So it's about buying right. And I always tell people, you make your money on the buy side. You need to buy right. And don't ever fall in love with the stock. You love your spouse or your family members. Don't love the stock.